We think Chinese capital market has entered a new normal in that when more and more investors start to pay attention to both economic and corporate fundamentals instead of investment stories. Yeah.
And do you see more upside for A shares from where we are now?
At the current juncture, yes. In fact, we are more positive for the market at current juncture than 6 months ago. We expect the current rather tight liquidity conditions won't be sustainable, and we should expect interest rates, especially short-end curve, to decline, and that should help the overall liquidity conditions, which will be good for both bond and equity market.
And which sectors are presenting the best opportunities at the moment?
Consumer discretionaries, and we also like manufacturer companies with home developed technology but globally advanced technologies, and we also pay a lot of attention to the potential SOE reforms. Those companies, state-owned companies that could benefit from SOE reforms if those reforms were to take place.
There's been a lot of conversation about the deleveraging campaign that's been pursued by policymakers here. How are you seeing that feeding into the markets? How effective is it being at de-risking the financial sector here?
I think as far as market impact is concerned, the most violent phase of this campaign-style deleveraging is over, and going ahead, I'm sure Chinese financial institutions will continue be under pressure from the regulators to delever.
And talking of the regulatory environment, how do you assess what we're seeing in terms of the regulatory crackdown on the large conglomerates, HNA, Fosun, Wanda, Anbang? How should we read what's going on there?
Chinese authorities start to pay attention to financial systematic risks, and start to pay attention to the concerns expressed by many China observers that China has too much leverage, and the overall debt level is high and keep rising, which is not sustainable. They start to taking action. China prefer to take a more direct approach. Basically, ask some weak institutions, be it corporate or financial institutions, to take direct action. They ask you to cut down your debt levels by selling assets. Right? So I think this is somewhat blunt and not market friendly, but is also effective. In the last few years, Chinese financial system, financial markets characterized by deregulation and financial innovation. And with benefit hindsight, some of the changes may have gone too far, too quick, and now there are going to be some backtrack in terms of re-regulation. Looking ahead in the next few years, we're going to see a much different regulatory environment as far as financial market and financial industry are concerned.